Hey everyone, it's Zack Beck. If you thought the housing market was bad already, it's about to get even worse. We're experiencing record high prices due to limited inventory and low interest rates from the Federal Reserve, but a recent change from Fannie Mae and Freddie Mac could potentially alter the way in which prices continue to increase here in the housing market right now. So what I want to do in this video is break down in detail what this change is, how it potentially could affect the housing market in your search for a home right now, and if you are searching for a home, the steps you should take if you're going on to Redfin, Zillow, or other sites to try and manage your own mental health through this process, because I know that it can be very stressful to go through it right now. So let's take our time, dive in the details, and jump into it right now. As previously mentioned, the US government is making a significant change to the way in which it backs mortgages. There are two organizations that are part of the federal government, known as Fannie Mae and Freddie Mac. And no, they're not part of a pop band or anything along those lines, but they are actually the way in which we back mortgages here in the United States of America. You might be familiar with those two names based on what happened back in 2008 when the housing market collapsed and it caused the Great Recession that took many years for us to get out of. This is because what happened during that time is Fannie Mae and Freddie Mac actually backed subprime mortgages, which allowed individuals who weren't able to qualify to buy a home, they provided them with a mortgage to actually be able to do so. That means they could have had no proof of income, they didn't need to put down 20%, and basically the regulations were so low and so little that they could actually go and purchase a home that they really could not afford. This caused all sorts of havoc across our economy, because then those subprime mortgages were bundled and actually sold on Wall Street, where investors bought them up and actually thought they could make even more money off of them. Then the house of cards fell when Lehman Brothers went bankrupt, and then we know what happened after that was the Great Recession. So the reason why I want to share this recent change that Fannie Mae and Freddie Mac have made is because it is important for us to understand that their track record is not very good. The original intention of Fannie Mae and Freddie Mac is to help individuals who otherwise would have a difficult time becoming homeowners actually enter into home ownership so that we can build generational wealth and establish equity, which will help them over the course of their lives and hopefully generationally help their children and grandchildren. So we understand that there's a good intention there, but oftentimes with good intention from the federal government, we can actually see those things go awry, like we saw happen back in 2008. Now what we're looking at is a very different scenario where Fannie Mae and Freddie Mac will back mortgages all the way up to $1 million, depending upon what city that you live in. This is a very different contrast to what we're experiencing currently, where the current limit is about $450,000 averaged throughout the United States of America. So that $550,000 increase could cause a lot of individuals to be able to reach into higher end homes that they otherwise could not afford right now. But this could also cause people to reach further than they really should, given their current financial situation, which might cause other issues down the line. One thing you'll hear me say oftentimes on this channel is that history does not repeat itself, but it often rhymes. And what I'm hearing right now with this dramatic change from Fannie Mae and Freddie Mac has a lot of ringing to what we had happening back in 2005, 6, and 7, right before the housing market collapsed. We are causing individuals to think that $1 million loan is something that they should not be concerned with taking under. But anytime you are taking on a loan, a mortgage, or anything to that extent, you will eventually have to pay that off, meaning that just because you can get a loan for an X amount of money doesn't mean necessarily you should take a loan out for that much, because you might be paying it off for the rest of your life, as we are currently seeing with the federal government tinkering with the possibility of a 40-year mortgage. Now, before you go and take a $1 million mortgage to buy a studio apartment in New York City, please do what you can to put a down payment on the like button for the YouTube algorithm. I'm just kidding, but if you wouldn't mind tapping the like button right now, it'd help the channel a lot and mean a lot to myself. If you're in the market for a home right now, I first and foremost want to say sorry. That is because this is one of the most challenging housing markets we've experienced in our recent memory. You have historically low interest rates, limited inventory, and a slew of buyers competing, driving the prices higher. And now you factor in Fannie Mae and Freddie Mac changing their regulations, it could push prices even beyond that. So what I want to do right now is take a step back and kind of look at this through a sober lens to hopefully help you navigate the situation if you're pursuing home ownership. What you should think about, and that is one of the most important things you want to take into consideration, is that when you're looking for a home, you want to get the home that's at the right place, at the right location, at the right time. Now, this is going to vary from individual to individual, given your life circumstance, whether you're married and have kids, whether you're single, whether you're living with your spouse or partner, whatever it might be, whatever your situation is unique to yourself, so you know what you're looking at. But I think it's important as you're going down this road to think about what this is going to impact you from a financial perspective the long term and preventing yourself from getting in over your head where you're going to be stuck with a mortgage payment that's going to exceed what you can actually afford for the next 30 years potentially. So from that vantage point, what you should be looking at is how much money do you have to put down, and then what you could actually afford on a monthly payment for your overall mortgage. And what you want to look at is try to do what you can to put 20% down as a down payment for your home if you can afford it. And if you cannot afford to do that, if you can only put 5% or 3.5%, that's an option for you, but you really want to think about the possibility of you continuously having to pay this loan off for a longer period of time. When you put 20% down, you do not have to have mortgage insurance, which then keeps your monthly payments a bit lower. So that's definitely a goal that we could and should strive towards, but I understand you might be in a unique situation where you're trying to get into a home sooner and you don't have that 20% down now. Totally get it, and I understand, but I just want to encourage you that if you have the ability to put that 20% down, it will save you money in the long run. Then what you want to look at is what is your actual monthly payment going to be? And if you're looking at something that's going to exceed 30 to 35% of your monthly income, I would have significant cautions for you doing so. That is because you want to have sustainability in your finances for you to be able to actually invest and spend your money in different ways so we are not just tied to real estate for your own wealth to be able to develop over time. You'll hear of a lot of people who are house rich but cash poor. That is because all their wealth is tied into their home. So there's no way for them to access that without actually leveraging or risking their home through a home equity loan or something to that extent. So if you try and target somewhere in that 20 to 30% range, maybe 25% as your overall payment on a monthly basis, that's probably what you're looking at. So having those two elements factored in, 20% down payment and trying to keep yourself at a 25%, no more than that on a monthly basis. Now you want to look at the big picture of what is the actual affordability of the home going to be long term. And you really want to think about this because it's easy to say, well, because my mortgage payment is going to be lower right now, I can just go buy a house for $1.2, $1.3 million, even if it's not worth it at this moment because it gets me into that home. I would caution you against that. The reason being, you want to think about property taxes depending upon what state that you live in. Because if you're looking at property taxes on a $1.2 million home, it's going to vary from state to state, but that could be a significant amount of additional money you're spending every single month just to be able to get into that home. Another thing that I think is important to bear in mind during this moment is that Warren Buffett has a saying that you should be greedy when others are fearful and fearful when others are greedy. I would say in the housing market right now, people are being greedy. What they're doing is they're spending excessive money for something that is not necessarily worth it because they feel as though it's their only opportunity to do this. I went through this back in 2005 when I purchased my first condo. What we had encountered is we actually had the prices skyrocketing in San Diego County, and it seemed as though it was going to be untenable for anyone to be able to own in that region unless you bought at that present moment because it seemed like it was exponentially increasing. What I found is that I ended up purchasing a condo for a significant amount of money that then what occurred is that price depreciated dramatically thanks in part to the Great Recession, and it took almost 10 years before it rebounded to actually being worth what it was when I bought it originally. So I would caution you that if you're in a situation where you're making this decision solely based off of greed, where you're thinking this is your only opportunity to do it, you want to be very cautious. That's where you might need to take a step back and see if this is actually the right time for you to purchase a home. Like I said before, right price, right location, and the right time. And if you're thinking about it from the timing for yourself, for your family, for your spouse, for just yourself, you might not want to put yourself through the stressful situation of purchasing a home when you might be paying for a significant amount more for a house that really isn't worth it. And if in your gut you don't think it's worth it, it probably isn't, even if on the sticker it does say that it is. Now, if you're going through the process of actually navigating this situation, I would really be cautious about how you do so. It can be very easy given our current economic environment and given our current environment with what we have access to from an information standpoint. We are constantly checking on Redfin, you're constantly checking on Zillow, and you're scrolling consistently. It can drive you crazy because you're looking at homes popping up on your phone and then disappearing right the next day, and you don't have access to what you're looking for. So you might be more impulsive and make a decision where you potentially go and pay significantly more for the home just because you think nothing else is ever going to come back online. My encouragement to you is if you're in a space right now where you're constantly fixated on purchasing a home, so you're always scrolling on Redfin, you're always looking at Zillow, you're always trying to find the best home right now, I would say take a step back. You will have the option to actually make this decision at a time when the housing market is more stable, or when the right house comes, you will know it and you'll be in a better financial situation to do so. If you're having to do this impulsively, if you're having to do so where you don't fully know what you're getting into, if you're waiving contingency, tenancies, you're not doing an inspection on the home, those are not a good time for you to actually be purchasing a home, and it might be putting yourself in a very negative situation long term. Many people actually regret purchasing their home. That's one of the primary regrets of millennials who purchased home just a number of years ago. I would put myself in that category when I did so back in 2005. Obviously, right now you have the ability to build wealth and equity. I understand that there are all sorts of benefits to being a homeowner. So think about it a little bit. You're about to make a decision that could potentially impact the next 30 to even 40 years of your life. And if you're doing so from a frantic standpoint where you're consistently trying to find the right home at the right place at the right time, and you don't have the ability to actually negotiate, you're trying to compete against other people, it might not be a good moment to do so. Because what I would hate to have happen is what could potentially happen to many people. Let's say that everyone's gone through this process over the last year and a half. They've overpaid for houses. They've done everything they can to lock up these mortgages. And then let's say the houses depreciate significantly in a short period of time. Then they could potentially be underwater and in a really negative financial situation. Not saying that is what's going to happen, but I will say what Fannie Mae and Freddie Mac are doing has very similar scheme to what happened previously. So I have some significant concerns about the housing market right now, and I hope that this can encourage you to just take a step back and make sure that if you do move forward on purchasing a home, stick to the parameters, stick to the finances that you already put in place when you began that search. Don't reach, don't exceed, don't go too far, because you might find yourself in a situation regretting it long term. With all that being said, I'd like to thank you for watching the video today. If you wouldn't mind, please tap the like button for the YouTube algorithm. Help push this video to other people who might need to hear it. Furthermore, if you have any questions, please comment down below. I'd love to interact with you, get to know you, hear your thoughts, because they might be dramatically different than mine, and that is okay. I want to hear back from you. Furthermore, if you wouldn't mind, please subscribe to the channel. That would mean a lot to myself personally, as I do everything I can to create positive content that makes a positive impact, hopefully in your life, by encouraging you and myself to lead lives of meaning and purpose, all while maintaining balance and moderation. And if you do subscribe to the channel, please tap the notification bell. That will notify you every time I post a video, which I do on a weekly basis. Once again, I'd like to thank you for watching the video today. I hope you have a wonderful day. Talk to you next time.